Let's talk about PDA. No, not public display of affection, but premium deposit account. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our EncycloMedia series, we're going to talk about the premium deposit account rider that you can attach on a whole life policy for those of us that are implementing the infinite banking concept. So a premium deposit account rider essentially allows you to a new policy, and some companies will let you add this to an existing policy. This is one of those rare riders that you can add even after the policy is already in force with companies. Another example would be the child benefit rider. Actually, if you've not seen my video on the child benefit rider, which is one of those other very few riders that could be attached to a whole life insurance policy after it's already in force, then you can check that out actually in this same series. I can put that in the show notes below as well. But the premium deposit account. So what it is you're taking future premiums. So let's say I'm actively paying my premiums this year, monthly, quarterly, semi-annually, annually, however I'm paying, but I can have this other account by having this rider. I can have this other account that is an interest-bearing account. Okay, so for those of you that are used to certain things, I'll give you a couple of examples where this definitely makes sense. You're used to building up capital in a high yield savings account where it's still liquid, where it's still accessible, and yet it's doing something for you. You're not investing that, but you want it to be earning interest. So this account would be an interest-bearing account, which is taxable, by the way. Let's remember that. That's taxable growth, just like it would be taxable growth in a commercial bank, high yield savings account, money market, etc. But it also remains liquid, and that's important in the PDA rider. Another reason that you might like this is if you're the kind of person that likes paying things early, being ahead of time, that's literally what this is if I'm actively paying premiums now, this is a place where I can earn interest on future premiums that I'm going to pay into the policy. So it's not just a place where I can earn interest, but I'm staging that capital as future premium payments for my whole life insurance policy. So it will earn me interest now. I still have access to it. This rider can actually be canceled at any time. The rider itself does not have any cost to it. At least with certain insurance companies, there's no cost to this rider. There may be a minimum contribution, and I definitely mean some nominal number. It could be $10, but there may be a minimum contribution, and there will be a maximum contribution, actually, and that may be something relative to how much base premiums that you are paying, which is very important. Again, the base premium is so important, not just for the policy split conversation, which again, that's another video that's in this EMS series, but not just for the split of the policies for creating a significant high early cash value. The base is so important later on for dividends. The base is even applicable to this particular rider. So the base, it can't be overstated how important base premium is. It's the power engine of a policy in so many ways. But there may be maximum contributions that are relative to, okay, how much can I put into this PDA? Well, it's going to depend on a multiple or a percentage in comparison to the base premium that you're paying. So there are no fees or penalties. You can have access to the money that you have placed in the PDA rider. You can cancel it at any time. There will probably be some minimum and some maximum contribution limits. You will earn interest on the money that's there. It is staged for future premiums. So actually, in that regard, there may be some stipulations as well to where, well, if you have an outstanding policy loan, the insurance company may decline a payment due to any indebtedness of the policy owner. So that may be a right that the insurance company will reserve. Of course, well, if there's some policy indebtedness, there may not be a payment there because, of course, the insurance company may need to take the PDA funds and pay outstanding policy premiums. If you've not done that out of pocket, if you've not paid your regular policy premiums and the grace period has expired, that PDA, of course, can kick in, which of course is a great benefit. The PDA can kick in and go ahead and be funding that policy to maintain it. And again, things happen, heaven forbid, but sometimes accidents happen. And this is a great example of having something in place so that that is perpetuated even from outside of the policy because of this rider. And I have spoken at another episode in this particular series on the non-forfeiture options of policies. The cash value within a policy can also pay its ongoing premiums. So it can be a great contingency fund because this is capital that you have access to. It's an interest-bearing account, and yet it's a great way to structurally stage capital for future premium payments. So you have all these benefits at the same time. Now, the interest may happen to be paid on the policy annual anniversary date. That may be how that may work, is that once a year you receive that interest on your account funds. And in the event that the insured dies, then the owner will be receiving those funds that are in that account rider, and or the beneficiaries will be receiving that amount if the owner was the insured. So I hope that this has been a helpful high look at the premium deposit account rider. If you would like to have a conversation with me about implementing the infinite banking concept, or particularly this aspect of enhancing a policy or procuring a policy for yourself, then you can find me at durhamtalents.com. My name is Jesse Durham, and my hope is that you will live and leave a lasting legacy.